Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with someone who's quickly becoming a fan favorite and a must-watch video on Sunday, Mr. Dan Bird, where we talk about the stock market, look back, look forward. How you doing, buddy?
Doing well. How about you?
I'm doing great. So if we're going to look back at the stock market last week, where do we start? The Fed decision on Wednesday, the Fed news conference, the job number on Friday. Where do you want to start?
Well, all of those, and then what's coming next week, which is the
Absolutely.
CPI
The
report,
CPI. Yeah, exactly. Yeah.
and
So,
some weird
so
and some really weird things happened too this week.
yeah.
But I'll
Yeah.
talk
So let's
about it. I had it in the newsletter, but
I saw it. I read them.
something
Yeah.
very strange happened.
So where should we start? I mean, when I look at so if we go back to Wednesday, just because it happened before Friday, I think it was really interesting. So the Fed comes out with their 75, which I had thought was coming. Then they came out with what I would call a rather dovish statement, which I felt very uneasy about. And then Jerome
Do
Powell.
you mean the statement before the Q&A?
Yes, I'm at the physical
Right.
press release. Yeah, whatever you
Yes.
want to call that,
Right.
right?
Right.
And then Jerome Powell comes out 30 minutes later and then kicks the market in the nuts.
Right.
And basically says, we are going higher. We may go slower, but we are going to stay there longer. That's essentially what I heard him say.
Yeah, that's basically what he said. I think the key phrase, and I actually put this in my newsletter. To me, the key phrase was, "We want to see empirical evidence of inflation coming down consistently over a period of time."
Yes, over a period of
So
time.
not just one data point.
No.
He
Yeah,
wants
the
he wants
thing,
to see he wants to see a continual decline in the CPI numbers.
yeah, so I know you and I have disagreed about Fed rate hikes when they're coming, when they're pausing. Um, I now think again, if I were to call it today, which is before the CPI number, so this could change tomorrow. I'm gonna guess we get 75 again in December, 50 at the first meeting, and 25, which will take us to a 5.25 Fed funds rate, kind of March, April of next year. What do you see out there?
I don't know. I still think he's going to go 50 in December,
Mhm.
but I think it's going to be dependent on what the CPI numbers come in at. Frankly,
Yeah, so let's go there next. I mean, I think the last two times we've done this, and this is why it's great having your playlist, so people can go back and watch our conversations from months ago if they'd like. Um, I think the last 2 months you were hopeful that the number would have a seven on it.
right?
Not you didn't think they would, but you were just hopeful, right? It's like
Yeah,
it's in the realm of possibilities.
right.
Do you hold hope that it has a seven again this time?
No,
Oh, you're not going to say six, are you?
five. No, I'm just kidding.
Oh, come on.
No, just kidding. No, I
Okay.
think
Whew.
I'm afraid it's going to still have an eight.
Yeah. Yeah.
And
That will not be good.
yeah, and I can show you why I think that. Let's see
Okay.
here.
Let's take a look. Yeah. So you're like, do you think it goes up though?
I don't think it goes up. No.
Okay. Okay. All right. That's
Um,
that's a little bit of good news.
so here are the commodity prices, including gasoline,
Yep.
and above that are the CPI and PCE previous ones. These are always lagging by a month.
Yep.
But the next one we're going to get next week will be for October,
Hmm.
and you can see October kind of went sideways.
So what is blue again? So
Gasoline actually ticked up a little bit more.
what is blue? Is blue just the full basket?
Blue is the Commodity Research Bureau
Oh,
Index,
got it. Okay, got it.
which is made up of these: energy 39%, agriculture 41%, and then metals 20%.
Yeah. So yeah, dude, I'm afraid it goes up. I'm afraid it goes up because gas, I think, went up. I think it bottomed the month before. I think food hasn't
Yeah,
slowed
gas is
down.
actually higher than it was a month ago. It actually is back to where it was in August.
So
So
I
yeah,
think,
gasoline went up.
and that was the big help last month.
Yeah,
Yeah.
commodities went down slightly, kind of going sideways on commodities. There are some other things that are helping, like the supply chain is actually getting
Mhm.
better.
Yep.
The cost of moving goods is going down.
Yeah.
Used car prices are down.
Yeah, definitely used cars. Yeah.
So there are some things that are helping. So this is just one data point here. This is just commodities and gasoline. It's not the only thing that will be
Mhm.
looked at, but gasoline is a big part of it.
Yeah. So this is obviously headline. One of the things that
Yeah,
we've talked about a bunch,
right.
or at least I've been on the fence of, is stop looking at headline because it's being manipulated. Look at
Mm-hmm.
core. And I think core was 6.3 last time and it was going
Uh,
up still.
6.66.
Oh no, it was 6.6. Oh no. Oh, it's right here, 6.6. So my big fear. Well, actually, I think I'm going to call this for the first time. I actually think headline goes up, but core may tick down ever so slightly, like 6.5.
Yeah, I don't disagree with that. I think they both might just kind of go sideways. Headline might go up slightly, core might go down slightly, but I think they're basically going to be going sideways.
Yeah, it's
So
not
I
going
don't
to
think
be.
we're going to get a 7. I think we're still getting an 8.
Yeah.
8.2 was the last one.
Yeah. So I'm
Um,
gonna I'm gonna go 8.3, 8.4 for
right.
headline, but 6.5 for core.
Now these numbers here, even though the actual numbers, the official numbers aren't reported until 1 month later, right? But if you look at it over here, the actual numbers for core is now 6.02, so it went down. And for headline is 7.29, so it went down.
I don't know what I'm
And
looking at. What? So tell me, why did core
I'm
go to
looking at the
6.02?
the actual data over here in the upper left hand corner.
Oh, okay. All right.
And PCE is at 6.88.
Oh, wow.
So all of those went down. All of those ticked down.
Mhm.
Um, but still, I think so. I don't think it's going to go up dramatically. I don't think it's going to go down dramatically. I
When do
think
we
it's
get when does the big roll off happen? Because I think we have one more month of base effect that
yeah. I
hurts
think
this month.
I think that's right. Yeah.
So it should get easier.
Right.
It should mathematically, the way the formula works, like next month is our first month that we could hope. I think next month is the first month we can hope for a 7, but it's all because of the
Yeah.
base effect.
Yeah. I think that's right. And the Fed knows that too.
Yeah, of course.
So that's why I don't think unless something really dramatic happens with these numbers, if they really spike higher, I think the Fed will stick with 5, 50 basis points in
Okay.
December.
Yeah. Yeah.
In
My
fact, I
guess
think,
today is
like
75.
I've said before, I think
Hmm.
the Fed will lose credibility if they stick with 75.
Mm. I think they've got one more in them, and then they go 50 after that. But that's okay. Yeah.
Yeah, I don't think so. I think the key thing that Powell said, and
Mhm.
really, frankly, he didn't say anything different.
Yeah.
I think the market was hoping that he would say we will pause depending on the data, and he kind of did say that in the statement.
Yeah.
But then in the Q&A, he said, we will do whatever it takes. We'll continue
We,
on our path
yeah.
until we see a consistent downtrend in inflation.
So here's my thought.
Consistent and continual downtrend.
This is my crazy total conspiracy theory about the statement versus the presser. The statement was basically a hodgepodge of different opinions, and that was the middle ground.
Yeah,
He released that to make them happy
right,
because he knows he's going to go up in front of the microphone and he can say whatever the hell he wants.
right.
And he might be the most hawkish of everyone. And when your Fed leader is the most hawkish, that's some pain right there.
Mm-hmm.
That's and I actually think he might be more hawkish than Buller at this point. And we have the other thing, dude. We have at least 10 Fed speeches next week. That's going to
Right,
be wild to watch.
right. This is the CPI. This is actually from my newsletter.
Mhm.
So this is the CPI going back to the 60s.
Okay.
So you can see we are, third highest ever, basically.
Yeah. Yep.
And what Powell is trying to avoid is what happened right here.
Yeah. The start and stop.
Inflation was spiking. They raised rates, but then they started cutting rates. They cut rates. Inflation came down. They cut rates, and then inflation spiked even higher, above 14%, almost 15%.
I remember.
This is what he does not want to happen.
No, he doesn't want that to happen on his watch. Nope.
Right. So he will continue to, let's see, I think he'll raise rates one more time in December. But I think the key thing that he said, and this really wasn't really a change.
Hold on. I want to go back to what I think you just said. Do you think they've only got one more rate increase in them?
Yeah.
Oh my gosh.
Unless the CPI keeps going up. I think they're going to wait and see what happens with this.
No.
And that's the key. And he
That's
said that. And I again,
funny.
I don't think it was a change. I think he said it before. He
Okay.
said, we're going to get to a certain point and then we're going to just hold it there for a
I
long
agree.
period of time. We're going to keep it there for a long time.
So when he told people that we were going to take the terminal rate higher than 4.6, you think that was just talking tough?
Yeah. I mean,
Oh,
he still might, but I think right now, I think it's what he believes right now,
yeah, of course. Okay.
but
Yeah,
that
see,
doesn't
I
mean
don't
that's
see
what's
it.
going to
I
happen.
don't I don't I don't see it that way at all. If you gave him true serum and he had to make a guess today, I think he wants to get to 5.25. I don't think he wants to. I don't think.
I do not disagree with that.
Oh,
I
okay.
think he does want to get to 5.25,
Okay.
but that does not mean he's going to get to 5.25.
Oh no, I agree with that. I agree with that. Yes. That I agree with
Um,
that.
and let's see if I don't know if I have the right chart in here, but what's going to happen, just like has happened before, is rates will go up, CPI inflation will start to come down,
Mhm.
and then we'll hit a recession.
Oh
And the
yeah. So what do you
recession, the
think?
recession usually starts when the Fed starts cutting rates. So
Yeah.
he's gonna get to some level right around five.
Okay.
It
We
won't be
agree.
5.25.
Okay.
He'll get to some level right around five, and then he
Mhm.
will say, we're gonna hold it here and see what effect our rate hikes are having in the economy.
I agree with
Knowing
that.
full well that it's 6 to 12 months before that is apparent.
Yeah. So let's just say the number's five, just because it's a round number. So we
Right.
get to five. Do you think he has the balls to hold it all year?
If we do not go into a recession, yes, he
Okay.
will. If we do not go into a recession, he will
Okay.
hold it there until this CPI number gets back down below 4 and it gets closer to 2. Yes, absolutely. He will hold it there for as long as it takes
I agree with that too.
for CPI to get down. But what is going to happen is a
Mhm.
recession will happen before that. And as soon as the
Oh,
recession starts, he'll start cutting rates. If
see,
not,
I
if
don't.
not, if not, if not just before that.
I see. I don't agree with that either. I think in this environment with inflation this high, I know what the history says and I understand it. I've read it as much as you. I don't think it's this is 40 years of history. This time is different. And that is we have a inflation at 8, which I think we both think will be in the sevens come early next year because of the base effect. Still too high. I think he has to hold rates again, we'll just say 5%, 6 months minimum into a recession. He can't cut right away. I don't think. Yeah.
Well, we're going to find out.
Of course. And we'll talk every week. That's all right.
I think that as soon as a recession starts raising its head, and there could be
Mm,
other things besides just a recession. I mean,
sure.
there could be something breaking in the economy itself.
Yeah.
Could
Well,
be
yeah.
a credit crisis, and if that
Well,
happens,
it
he
will.
definitely will cut rates.
Yeah. Credit. I mean, yeah. If you were talking black swan credit, that could cause a reaction for sure. Yeah.
Right.
So then what about the jobs number on Friday? So that came out stronger than expected, even stronger
Yeah,
than I
I said it
expected.
would be stronger last week.
Yeah, you did. You nailed it. Um, it was a pretty strong number until you dug into the number. right? There was some
Right.
kind of adjustments that they make occasionally
Yep.
that really showed it really wasn't that strong. And I think that's why the stock market was up.
Um, let's see here. Not sure what I've got. The this kind of shows it. This is a daily chart.
Mhm.
The market went down after market first went up when Powell read his statement, and then it went down when he started talking in the Q&A.
Exactly. Yeah.
And then the strong jobs number came out, which I thought would send it even lower,
Yeah.
but it actually didn't.
Yeah. And I think that was the devil in the details. I think if you traded on the headline, it was more good news is bad news. But if you
Right.
go into the notes, which I didn't do till that evening, there's like all these funny adjustments.
Right.
Yeah.
Yeah. And again, remember the market is ahead of the economy.
Oh, I totally agree with
So,
that. Yes.
so something
Yeah.
else happened, and I said this in my newsletter that was really strange,
Okay.
and that was the VIX.
Did the VIX crash? Oh my God, it crashed.
Yeah.
What is going on? I don't understand. Why did
What
that happen?
what the hell is going on? I have no idea.
You and me both.
That's that's what I said. I even said it in the newsletter. I said I do not know what this means because you can see down here sort of there's 3 days worth right there. So this first big red one was after Powell started speaking. Market went down. The next day the market went down again, Thursday. On
Can I ask you?
Friday the market started off low,
Yeah, and then
but then
came
it
back.
started going back up.
I got a crazy question. Could
But
this
but the thing
just
is, the
be?
thing is, the market went down for 3 days, and so did
Yeah,
the VIX.
yeah. It's weird. It's
Not
wild.
supposed to do that.
Is this just evidence maybe that retail is out of the market? All we have is big machines trading.
It might be.
I mean, it's got to be because retail is what drives the VIX up. It's that capitulation.
It's yeah. Well, it's not so much retail necessarily,
No.
but it's because it's really the options market is what the VIX is based
Oh,
on.
okay.
The VIX is
Options.
based on options, but
Hmm.
it's really the acceleration of selling that drives
Got
the
it.
VIX up.
This is
Or
wild.
let's say that the acceleration of buying puts is what drives the VIX up.
So this to say this doesn't happen a lot, to say that you're confused given as much research that you do, is this just a sign that the average person like myself should sit back and do nothing for a little while?
Yeah, oh yeah, absolutely. I would definitely not do anything before that CPI number
Yeah, I
because
would too.
there is no way to know what's going to happen
Okay.
one
I
way or
like that.
the other,
I like that answer. I like cash.
no matter how it comes out.
Cash is okay with me.
Yeah, I mean between now and Thursday, we don't have
Yeah.
no idea. Now I did go back and I said, so when this goes green right here, that usually is an indication of a longer term trend.
Mm,
So the gray line is the actual VIX number.
right.
The red line is a 5 day moving average, just to smooth it a little bit.
Hmm.
And the green line is a 21-day moving average to start to be able to visually see the change of direction.
Mm,
Right. So when the gray line goes below the red line, that's where I mark my first buy. That's where the bottom is.
mm,
So you see the gray went below the red right here. That was a bottom. Happened right here. That was a bottom. Happened right here. When the other side happens, when the gray goes above the red, then that's usually the top.
mm.
That's where the top happens.
Okay.
But even with these two right here, the red was always red. The 5 day was always above the 21 day.
Mm,
So it was a long term downtrend, even though you had some little uptrends inside of it.
mm.
You follow that?
I do. Yeah. Hmm.
So all of this red right here, just follow that down to the S&P. That's from here down to basically down to here.
Right.
But when it turns green, then that's the other side. That's usually where the uptrend, a longer term uptrend starts. And you can see it over here. So it turned green right here. And even though it went up and down, it basically continued to go higher all the way through this green
So
period.
you're still hopeful for your 4,800 this year.
I am probably, it depends on the CPI number, but I'm probably giving up on that
Okay.
this
Okay.
year.
It's about time.
Not completely. I mean,
No, I get,
things
yeah, if you
could
get
change,
it could
but we'll
change.
see. We'll see what happens if CPI comes in above
If
eight,
it,
and if it's
yeah,
at 8.2 or higher,
no,
then
it's not good.
absolutely there's no way.
No way.
But if it
But if it
comes
seven,
in at
yeah,
eight
maybe.
or even a seven handle,
Yeah,
which I don't
maybe.
think it will, but even if it comes in at eight, showing a downtrend, even though it's not a fast, an accelerating downtrend, but it is going lower, which is what the
Okay.
Fed said. We
Yeah.
want to see it going lower consistently and continually.
Yeah, the only chance you have is you get a 7.8, seven
Right.
nine. It's got to have
Right.
a seven. Yeah.
But here's what I did because this was so strange right here. The market went down for those 3 days, but so did the VIX. That does not happen.
Yeah. Okay.
And even if you can kind of see the gray in the background, even that
Yep.
went down. So it's not just the moving average that went down, but the actual number itself went down.
Mm-hmm.
So I went back to try to find another period where that happened.
Okay.
And I found this one right here. So this you see here the green was just starting and the green is a longer term uptrend.
Okay.
So I went back and I noticed right in through here, we went from this level and we went down to this level. You see that right there?
I do.
But the VIX continued to go down.
Mm.
So it stayed green. And then we had a nice long uptrend into the middle of August. So it could mean that this is going to happen again. We might get another uptrend, but I frankly I don't know.
Yeah.
I just don't know.
When
When we had that big
when
sell
it's
off,
too hard, it's too hard.
yep. When we had that big sell off right here, and if
Right.
I don't know, then the best thing is just to stay out, just step aside.
Yeah.
Um, so we had this, when the market went down after the Fed rate hike came out,
Mm-hmm.
the put call ratio spiked.
Yeah, it did.
So everybody was buying puts, and then the next day everybody was selling puts.
Hmm.
All of a sudden they weren't
Yeah.
um, as afraid. They weren't counting on the market going down anymore.
Hmm.
It's kind of what the VIX is saying too. The VIX is saying that fear is dissipating. This
Yeah,
is
it
the
is.
fear index. Fear
It
is
is.
is going out of the market. And that
Yeah.
and that should say that we're done, that the market has priced everything in, all the selling is finished. There's really not many sellers left. So it should be the point that the market turns around. And you can see the percent of stocks above their 50 and 200-day moving averages down here.
Oh, yeah, look at
Usually
that.
when that goes below this pink line, when it goes below 10%, that's usually where the bottom is, which is right here in September. And
Mm-hmm.
we hit 3,500 in October. So we actually continue to go down, but this percentage of stocks above their 50 went up.
Mm-hmm.
That's a positive divergence, but now it's way up in the healthy zone.
Yeah, exactly.
It's above 50% right now.
Pretty
And
wild.
the number above their 200-day is, above 35%.
Well, this, I mean, something that, because I know I'm talking to you on Sundays, to me, something that I've seen that's unusual, like the Russell 2000 is doing really well, but the Nasdaq's not.
Right.
Is this just the fact that the real economy, like they used to say back in the 2000s, is doing okay, but tech is not?
Well, yes, absolutely. Yeah, tech is definitely taking the brunt of it all. Um, so let's look at IWM and the Qs. So this is the Russell compared to the Nasdaq.
Oh, okay. Yep. There we go. All
All
right.
right, so you get the Russell on the left-hand side. We'll look at the long-term one. So the Russell on the left-hand side and the Nasdaq on the right-hand side. You can see the Russell went up at the end of the day.
Yeah.
This is a week. This is actually a weekly view. So this is each
Two
one of
weeks in
these
a row.
represents 1 week.
Yeah.
So last week the Russell went up and the Nasdaq went down.
Yeah. Yeah, I think that's, I mean, you and I've been around long enough to know that .com bust up. I think what we're
Yeah.
heading into is a year or two of tech being out of favor. We're going to see more, the layoffs that happened at Lyft, Stripe, Twitter, more coming. They've got to get to cash flow positive. They've got to turn real profit, stop the growth at any cost. I think there's some real pain coming to the tech side, and the money's to be made in boring real economy.
Yeah. Yeah. So Staples.
Yep.
Yep. I don't disagree with that. Although, and for that reason, we probably won't get back to 4,800
Yeah, I was just going to say if we don't
because
have
we
tech,
can't
you
get back
can't
there
get
without
there.
tech.
You can't get there without tech. Yeah.
No. I mean,
Okay.
if we look at XLP versus XLK, so this is staples versus technology.
Oh yeah, look at that.
So it kind of looks like the Russell
Yeah.
versus technology, right?
Mm. Yep.
The staples is up here. It's just crossed or about to cross its 200-day moving average, and tech is still well below its
Well
200
below
day,
it. Yeah. Okay.
200 week. This is actually a 200 week.
All
So
right.
yeah, um, it's going to be very hard to get back up there without tech participating.
Yeah.
Now,
So as we kind.
interestingly,
Mhm.
semiconductors actually did fairly well, relatively well last week compared to everything else.
Oh, they were crushed for 2 weeks in a row, right?
Yeah,
Nvidia,
I mean they've been
AMD.
crushed all year.
Right.
They've been on a downtrend all year, but they actually held up fairly well last week. But software didn't. Software still.
Oh, dude, did you see Atlassian's numbers? Oh, that's a sign of pain to come in software.
I didn't see it, but
Oh, yeah, Atlassian. Oh, not good.
oh yeah, look at that.
Not good. That's a drop. They
Yeah, and
basically,
this was a real darling
yeah,
last
this is
year.
what's coming to SaaS companies. They have quotas given last year. The Atlassian team says people are buying less. They're not buying, not renewing. Everything's taking twice as long. This is going to come to everybody.
Right.
People are going to have to reset quarterly expectations. Sales reps are going to make spit. It's going to be terrible. Going to be layoffs coming. Oh, yuck.
Layoffs actually might help stocks go up.
True. No, no, of
Conversely,
course. Yeah, of course. Yeah. But yeah, it's
but
software's going to be in tough. Software's
but
out
if
of
I
favor.
if I had looked at we didn't look at Atlassian, but if I had looked at that before their earnings,
Hmm.
I would have said they're probably not going to have good earnings because this blue line here is how they were doing against their peers.
Hmm.
So before this big drop, if you look at it before that big drop right there,
Yep.
they were underperforming their peers,
Hmm.
and their peer group has been underperforming for quite a while.
Hmm.
And in fact, their peer group, the green one versus technology, the sector,
Hmm.
has been dramatically underperforming the sector.
Hmm.
So I would have said Atlassian is probably going to miss their number
Yeah.
based on this,
Well, let's
which is,
throw up Snow. I think, or no, now. What is it? Service now? I think it's now.
yeah, yeah, they had a big sell off.
Yeah, I mean, hit everybody.
Now they were overperforming. They were outperforming their peers, even though the peer group was underperforming.
Hmm.
But ServiceNow had actually been outperforming their peer group,
Mm.
but their industry was dramatically underperforming, which is the same one that
Yeah,
Atlassian's
same,
in,
same.
right?
Very, very cool.
Very. Let's look at Snow just for curiosity. Snowflake looks very similar to ServiceNow.
Yeah, very
So
cool.
let's look at this is the market. So we've got the Dow, the Nasdaq, the S&P side by side. You can see they all sold off, and the Dow is actually outperforming the rest of them. The
Everything.
Dow is above its 20 and its 50-day right here.
Yeah, and if I were to call the Dow, I'd call that the real economy.
Yeah, that's right.
Hmm.
And then the Nasdaq here is under both its 20 and its 50, and the S&P is right between its 20 and its 50. But all three of those had a bounce on Friday.
Yeah, I was. Yeah. Hmm.
This is the 10-year.
Yeah, going up
So
again.
as the 10-year goes, typically so goes the market.
Hmm.
10-year was started to come down, but you can see it's bouncing off its 20-day all the way up.
Hmm.
So it hasn't broken down yet.
Okay.
And then here's the VIX. I mean, this really shows it pretty well right here.
Yeah, that's wild.
Look at that VIX just dropping off a cliff as everything else is selling.
Hmm.
And if we look at the individual sectors, we've got materials here. Looks pretty good, actually. Materials. So think of it, the 20-day and the 50-day down here. You want it to be above those. So materials is above. Communications is terrible. This is
Yeah.
the one that Meta is in.
Yeah. Internet. Yeah.
Communications is awful. Energy just continues to chug higher.
Hmm.
Financials is looking good.
Yep.
That's above both the 20 and the 50. Industrials has been looking really strong
Yeah.
as
Look at
well.
that. The real
Technology
economy.
again.
Yeah.
Technology went up to the 50 and then got rejected. And now it's underneath both. Staples is above both and heading higher. Real estate is right in between the 20 and the 50.
Yeah. That's going lower.
Not looking too great. Utilities the same. And then healthcare right here is above both. So healthcare looks pretty strong.
Hmm.
And then discretionary, which is almost kind of the opposite of staples.
Yeah. Yeah.
Discretionary looks pretty bad as well.
Excellent.
So of these, of the industry groups, I would say financials, industrials both look really strong. Materials is just starting to make a run. Healthcare looks pretty good as well.
Very cool. Awesome.
When we get to the second session, we're gonna look at some things in VectorVest, some of the features of VectorVest,
Hmm.
and I have these industry or sectors rather set up so we can look at stocks inside of each of these sectors.
Nice.
This is the VIX that we just talked about. This one here is my bottom finder. So again, when we get the percent of stocks above their 50-day below 10%, and we get a VIX that's above 30, which is this green one, and we get a put call ratio that's above 0.8.
Hmm.
When all of three of those things happen at the same time, which happen right here, that's usually close to where the bottom will be. And we actually went down one more time and then started back up. All of these things now are indicating that we may still continue higher, but I think it's all dependent on the CPI number.
Yeah. Which is
All of this. Now
Wednesday.
here's the one that's really concerning. And I've
Oh
talked about
yeah.
this all year long about the rotation charts, right? And
Hmm.
how back in December when the market was going higher, big institutions were rotating out of technology and out of growth and rotating into staples and value
Hmm.
plays, even as the market went higher. So that was the warning sign that the market was getting ready to roll over. And then it just continued down until June. And in June, when we hit a lower low on the market itself, all of these rotational views started to trend higher, meaning institutions were rotating back into growth and technology, even as the market was hitting lows again.
Hmm.
The problem, though, is that right now, as we're hitting highs, just like back in December, market was hitting highs.
Hmm.
These rotational views are actually hitting lows,
Yeah.
which implies that institutions are rotating back to value and back into defensive areas as the market is going higher. That is not a good thing.
Not a good thing. Nope.
So that's another reason that I'm thinking we're probably not going to get back to the high this year. And this one is I showed this on my newsletter last week, and I'll show the newsletter here in a second. But this is the long-term secular bull, secular bear. How can we identify when we are no longer in a secular bull market
Yep.
and we are in a secular bear, meaning it's going to be a much longer, long-term bear market?
Hmm.
And that happens when these three things trend below this green area. So when this one up here goes below the pink line, which
Okay.
is the 40 level for the relative strength, you can see it stayed above it throughout this whole secular bull market, which basically started in 2009, but was confirmed in 2013 when it went above the high.
Hmm.
It stayed green all along. We're getting close to this pink line.
Okay.
This one here is still in the green and is still pretty far away from zero.
Okay.
So this one's still got a ways to go. And then this one down here is following the 50-month or the 200-week is the pink line right here. 200-week moving average.
Hmm.
And that's the thing that has pretty much supported the market ever since back here in 2011. So through this whole secular bull market, this 200-week moving average has kind of been the support for it.
Okay.
We went down to it last week and then bounced back up,
Hmm.
bounced off of it.
Okay.
If any one of these three breaks down, if any one of any of these go below that green area, then it's the first indication that the secular bull market might not play out, that we might be in a long-term bear market now.
Mm.
And if that's the case, we definitely are not going back to the high.
Yeah.
So it's important to watch this one. This is a monthly chart, so it's very slow moving. This one we talked about already, CRB and gasoline.
Mm-hmm.
And then this one is basically just shows the long-term channel that the market's been in since the beginning of the year,
Mm-hmm.
which we're still in, or we're kind of right in the middle of it right now.
Yeah.
So before we can break out, before we can ever get back to new highs, we've got to break back above this downtrend line and the 200-day, which is right there at 4,100.
Okay.
So if we can't get above 4,100 and stay there, then there's no way we can get back to that high. This is the S&P over, this is a weekly over a 5-year period. Again, it shows you the channel, the downtrend channel. It also shows you the levels here. This is the Fibonacci level. 3,500 is the one we just bounced off of. 3,200 is the next one down.
Mm-hmm.
This is for the S&P. And we're right in the middle of the range right now.
Yep.
So right at that 38% line, 3,800 range. And we bounced off of 3,900, which is a really important resistance level. We couldn't get through it. Mm-hmm. So now we've got to see if we're going to stay here and start going higher, or are we going to break down through 3,500 and hit back to 32. That CPI number might tell us that next week.
Yeah,
If that CPI number comes in at 8.3 or anything higher than it was last month, then we could easily be headed back to 3,200.
Yeah, all I keep hearing you tell me is Zuber, don't buy anything. Just sit in cash.
Yeah, don't buy anything.
Got it.
Sit in cash. Now's not the time. We've still got a lot of work to do. This is the NASDAQ, kind of the same view, 5-year view, with the blue lines being the Fibonacci levels. Yeah. So right now we're bouncing off of the 61.8 level. Oof. These are, by the way, these are anchored between the high from November, December of last year, back to the low in COVID, the COVID low.
Okay.
Those are the anchor points. So it's really the low and the high of this very long-term 2-year period. So the next level down for Fibonacci is 10,600 roughly, which is right about where we are. So we kind of bounced off of that and came back to it. And that's right where we are right now. So it's really important to see if we can get through this. Very cool. If we get a bad CPI number, which affects NASDAQ more than any of the others, then we could be heading back to this quad level right here. This basically breaks it into 4 equal quadrants between this long-term period. And the next quadrant down is 9250 on the NASDAQ.
Okay.
All right. So that CPI number is the most important thing to watch this week on Thursday.
Cool. Show your newsletter and we can get into VectorVest next.
Yeah, we'll do that on the next session. So the newsletter, if anyone's interested, a lot of the things that we just talked about are in there. We talk about things that aren't in there too a lot of times, but a lot of this is in the newsletter along with some cartoons.
I didn't realize the forecast is 8 for CPI.
Yeah. Forecast is 8. 8.2 was the last one. Forecast is 8.
These forecasters suck. They're not very good.
Well, it was last month it was 8.1 and we came in at 8.2. So this time it's 8.0. We might come in at 8.1. Now, the 8.2 was higher than forecast, but lower than the previous one.
Yeah, you're trying to find silver linings. I understand.
No, that's true. That's confirmation bias. You have to always watch out for that.
Yep.
You have to watch out for trying to confirm what your hopes are.
Yeah, it's all about core. The core is the problem.
But if anybody would like to join, it's at Breakpoint. Just send me an email at breakpointtrading@gmail.com, and I'll add you to the list. And if you want to be removed, just let me know, and I'll remove you. It's pretty easy.
And I can't believe
I do this every Saturday. I have company here this week, so this week had to be a pretty quick one to get that one out. But
I can't believe you've been doing this for years. I've appreciated reading it for years. Folks, send them an email, breakpointtrading@gmail.com. You will enjoy it. And if you don't like it after a couple of weeks, just have to be removed. It's free.
Right. It's
Worst
it's
case, you
free.
look at the cartoons.
It's free. It's free to join, but it costs $500 to get removed.
That's a good one. I like it. It's free to
That's a
join. No,
that'd be a
he's
good
kidding
business
though.
model. I should think about that.
There you go. That's hilarious. All right,
Now
buddy. Take
it's
care.
I'll take you off if you don't want to be on it. It's no big
Yeah,
deal.
that was a joke. Yeah. Thanks, bud.